Welcome to another edition of Focus on Alternatives, brought to you by ADISA, the Alternative and Direct Investment Securities Association. For more content like this, please check out the resource library on adisa.org. My name's Greg Mausz, I'm your host today, and we have Eric Rice, the head of impact investing at BlackRock. Thanks for joining us.
Thanks, Greg.
Can you start off by explaining the major demand drivers for impact investing?
I think it's a confluence of things right now. I think that on the one hand, you have COVID, which has everyone's attention for the kinds of companies that are solutions to the problems that we've all seen. But I think more than that, people are looking at climate change and saying, how can I be investing in companies that are that are causing the problems for climate change at the same time as my family and I care about being connected to align with the solutions. And I think that there's also the fact that it's now possible to do impact investing in a mainstream way, that there are products that are advancing these solutions. There are products not just on the environmental side, but also solutions to social problems. So I think that the two things come together, and now it's possible for high net worth, for institutions to be making these investments. Oh, let me also say, it's also possible to get investments that are professionally managed. That's new. It hasn't been even 10 years since that was possible, rather than a few people whose heart was in the right place. Now it's conventional investors like my team and me who are investing for returns.
So we're hearing a lot more about impact investing. Seems to be really hot right now, but is this trend going to continue, or do you think it's going to fade with the next news cycle?
Well, so the research we have at BlackRock shows, on the one hand, sustainable investing, which we consider the umbrella of ESG and impact investing, is growing twice as fast as all other investing. And I don't remember the numbers, but it's in the at BlackRock alone, in the hundreds of billions of dollars. In addition, impact investing, that is investing in solutions to these big problems, is growing twice as fast as sustainable investing, which itself is much faster than any other investing. So, I promise you, BlackRock is doing the right thing, but we also like to do the thing that is profitable and that is a growth opportunity. And this is a big growth opportunity that we see out into the foreseeable future.
So you don't see it fading at all?
No, not at all.
So is it investors driving this demand? Is it institutions driving this demand? Or which side of the coin is that?
Yeah, interesting. I think that we have the nice opportunity to see what's going on in Europe ahead of ourselves in the US. So in Europe, it came from institutional investors first, some ultra high net worth, but now it's everybody who's investing in it there. I mean, you have it in pensions, you have it in government, own government portfolios. It's everyone. In the US, it's really accredited investors. And until the Department of Labor recently changed its rules, it wasn't in pensions, but it's going to be in pensions, I think, like it is in Europe. So it's a cascade from the big informed institutions down to even mass affluent, where it is in Europe already.
What can asset managers and financial advisors be doing better to kind of meet this demand?
Well, a lot, I think.
Okay.
I mean, so on the side of asset managers, I think we have a history of not great products. They weren't alpha-oriented products, right? So we had people with their heart in the right place. They would go in, create some sort of portfolio, but as you can imagine, it's not a great investment. But in the last half dozen years, we've started having a good number of professionally managed, alpha-oriented, or even ETFs that are properly managed to achieve the targets that people expect. So asset managers have to do more and more of that on that side. On the side of advisors, I think the reality is high net worth clients are starting to ask for that. And to do okay with that, advisors have to be knowledgeable. They have to be a step ahead. And to win in this game, they have to be a few steps ahead.
Right.
So knowing what the difference is between, say, venture philanthropy, that's not really in the investing part of the world, but between that and then ESG investing and impact investing, and knowing which are actual credible products to be offering and how it fits in with a client's policy, how to be able to answer the question, well, does this cost me return? Or, which it needn't,
right,
but it can be a returns enhancer if constructed properly in a client's portfolio.
Completely agree. So if this trend is not going to stop and continue, where do you see the industry in the next 5-10 years?
So the impact part of it is pretty nascent. I mean, that is, in the whole world, probably not $1 trillion, I think, out of a world of assets that's in the few hundreds of trillions of dollars, right? Mm-hmm. In 10 years, what is now $1 trillion is likely to be in the $5+ trillion range. So this is not core investing, but this is a core part of investing.
Oh, interesting. So who is really focused on investing this way today?
So as I was suggesting, in Europe, any kind of investor. In the US, it's two things. It's certain institutions, and we talk to and have investments from big pensions, big institutional investors, family offices, leaning more toward the West Coast as you'd expect. Sure. But it's expanding, and I think that as there's more clarity and more number of products, I think, I would tell you, as a portfolio manager, I cannot do an RFP for a mandate, a request to explain my mandate without explaining what my ESG and what my impact is. And it's not just as an impact guy, it's, of course people would ask me that. It's for every PM. Every portfolio manager, if they have a request for a proposal, has to explain what they're doing that explains the sustainability of what they're investing in, because people can't take the risk of those kind of downside controversies in their portfolios.
Makes a lot of sense. So alternative investments, that's the industry association that we're here at. Do you consider impact investing an alternative, or is it just a different view of mainstream investing?
So there are alternatives that are impact investments. Okay, so at BlackRock we have plenty of PE portfolios, private equity portfolios, and a subset of those are impact PE. And similarly on the public side. So I would say that they are a more and more mainstream flavor of investing, whatever the asset class is. I mean, if we're talking about green bonds, we have a portfolio for green bonds that's benchmarked against all other conventional bond portfolios. Same thing in equity. Same thing in real estate. We have all sorts of sustainable products of every kind. So I think the real question is, what's the risk appetite that's being addressed? Mm-hmm. What's the return requirement? It needn't be higher risk for a given return, but there are appropriate and more alternative products depending on what the client's looking for. What I do is mainly in public markets. The way I think about that is, if you have a client and he or she wants to put money into private equity impact, well, everybody's chasing deal flow. You can't deploy $10 million tomorrow in anything, let alone impact. And so what some clients use a public markets impact strategy for is, they make a decision. We want impact in the portfolio. Our next generation wants to see that, for instance. Mm-hmm. And so we'll do that, but if we're going to get invested over some number of years, we can't do that much today. So we'll put some in the public markets, and over time, as we find PE investments, that's what we'll use to deploy that.
Excellent, Eric. Thank you for walking us through kind of the demand and the future for impact investing. And thank you for watching another episode of Focus on Alternatives. For more content like this, please visit adisa.org. Thank you.